Felix here. Is the tech sector tanking because Trump's personal safe got rifled through? No. Is it the European energy crisis? No. Is it, the European economy imploding? No, none of that. It's none of the heat wave either here in the south of France. It's one very specific event today, and I think it's important to understand that and put that into context with what's happening tomorrow, CPI, what's happening on Thursday and Friday, and that's our intention here. Before we get into that, have a look at this. It's completely free benchmark I make for you typically once a quarter whenever the new numbers come in. So check it out, felixfriends.org/NASDAQ. You get a full-blown 100 plus stocks. If I could only find you the right screen as well, that would help tremendously. Here it is. And that shows you literally all the key numbers for all the key stocks out there. Highly recommend you download that. felixfriends.org/NASDAQ. And what happens next? Oh my God, we got disclaimers. Isn't that amazing? And a cat in the background. Can you spot the cat? Spot the cat down there waiting for food, undoubtedly. But let's get to the heart of this before I ramble on for too long. So what's going on here? Well, we will have a look at the market in a second. But really what I want to talk about is Micron Technology. And you're like, why would you tell me about Micron Technology? Nobody cares. It's some random, computer chip type company. Who cares? Well, they tanked the market today. All they said is that their forward guidance may come in at the low end or below previous guidance because customers are scaling back their own inventories. That sentence tanks the market. At the same time, investors are becoming more cautious on CPI data. Why are they becoming more cautious on CPI data? Well, it's coming on Wednesday, and it's coming whether you like it or not. If you think about the solid wage growth that we have, the US productivity data that's pointing up, the surge in labor costs pointing up, the Fed's got a pretty tricky task. I don't think anybody really wants that job. It's not really one that you can come out smelling of roses out of. Now, what's going to happen? Well, we're expecting as a market not a 0.5% interest. That's only 31% of people. Not people, but that's actually the Fed futures. But a 0.75% interest rate hike is basically baked in. It's 68% of what the Fed futures here are predicting. And that's a slight increase over what it was yesterday. It's double what it was last week. So the market is realizing, hang on, last week it was in la-la land, and I said that, thinking that inflation has sort of magically come down and the Fed will do less. And this week, the market's like, whoops, it seems we got it wrong last week. Now let's come back down to earth. But there is a little thing called Jackson Hole in September, which sounds like a lovely place to go skiing. I wouldn't mind going there and checking that out. What are we going to get before that? Well, we're going to get a jobs report before that. We are going to get more inflation data and lots of other little bits of data. I'll show you what they are just at the end of this because it's important you understand it. And we also want to talk about what Morgan Stanley and Goldman are saying here. So this is really like a full market analysis roundup of everything. But I also want to show you, because I think it's important actually for transparency, how much money I'm making. Plus, it's quite enjoyable, really. When you're making money, it's kind of nice. You want to tell people, don't you? So yesterday, I made $2,585. This is on about $50,000 of options invested. I made $2,500 in one morning, in fact. Today, it's sitting at about $218. It's a smaller portfolio. We sold a lot of it yesterday, and it's still very nice and green. And there'll be more and more coming through the week. At the moment, we've got $417 here. There'll be more coming in. And I haven't set up any trades today. Why not? Because I don't think tomorrow is predictable. And I think that's a problem. For me, it's a problem. I like to be market neutral. I want to be in a place where the market is predictably not moving more than, say, 10%. And certain stocks could move more than 10%. I don't really like that situation. So far on the year, I'm up basically 101% plus that $2,500 from up there because I haven't updated my sheet yet. I'm trying to automate my sheets because I'm doing more trades and it's a bit of a pain in the neck. It's not like sort of stocks. With stocks, your brokerage tells you how much money you made. With options, they don't. I don't really know why, but that would bring us to, 100 and 607% or something like that for the year, which is, of course, absolutely lovely. But let's talk about inflation. And obviously, if you wish to join us on that party, two ways of doing that. Book a call with us at felixfriends.org/coaching. Talk to the amazing Cheryl, who's my right-hand woman, has been for more than 10 years, worked with me for that long. She is a US trained accountant, smart as anything. And do check that out. And otherwise, you could jump straight into the program, which is at felixfriends.org/options, and I'll show you exactly how my strategy functions and everything. And you see that cat down there making that racket? She's scratching cardboard. It's the funnest thing you can do when you're a pussycat. Right. There is some good news, and I like to always give us some good news, especially towards the end of videos, because I'm an eternal optimist. Americans, that's probably you, are expecting less inflation in coming years, according to a recent survey by the Federal Reserve Bank of New York. Now, Powell said that the bank wants to see clear and convincing evidence that price pressures are subsiding before slowing or suspending rate increases. One of the key things for them is looking at expectations. They got really freaked out. That's why we got these 0.75% rate hikes that people were expecting, like higher and higher inflation. It was going to get ingrained. So the inflation expectation has come down to 6.2% from 6.8%. And for 3 years, from 3.6 down to 3.2%. So that's positive, right? That's moving in the right direction, although still more than 50% higher than the Fed would like it to be. And why is that? Well, it's quite simple, really. People look at and remember what they see. Food prices are coming down and gas prices are coming down. And why are gas prices coming down? Well, according to the White House, Biden did some magic and, just conjured up a lowering in those prices. No, of course, it isn't. Oil prices came down a little bit, refining costs and so on, capacities came up, and that was that. But what politicians are like, they take credit for absolutely anything, whether they should or not. Now, what about Morgan Stanley and Goldman's? And then I'll round up with what to watch out for this week. So Morgan Stanley and Goldman's are turning a little bit bearish. They are basically saying that earnings expectations, which is what the whole market is priced on, are, wait for it, unrealistic. So they're basically saying we're going to get disappointments in the next set of earnings coming out next quarter. What we are forecasting, what we're predicting in our models is too through rose-tinted glasses, that kind of thing. Spending too much time with Winston, the world looks wonderful. And therefore, there's a word of caution there. But I'll tell you what my strategy is in just a moment. What have we got this week? Well, you know what's happening tomorrow. So Wednesday is CPI, inflation. Thursday is jobless data. And PPI, producer price index for good measure. And then Friday is that blasted consumer confidence or consumer sentiment index again from Michigan. I've never been to Michigan. All I can imagine is an army of clipboard-wielding economists accosting people on the sidewalks of undoubtedly glorious Michigan. And I'm sure you get asked continuously, what's your sentiment on consumers? So that's what's happening. And what's the strategy? Well, for me, very simple. Literally very, very simple. Number one, buy stocks weekly. Why weekly? Because you've got 52 chances of that. If you do it only monthly, you only got 12. Makes a big difference. What kind of stocks do you want to buy? Well, obviously, our NASDAQ tracker will give you some assistance. We also have a stock tracker dashboard, which I think is super, super useful. And I put MU in here, for example, AMD, Intel. I just put these in. Obviously, the names don't match because I haven't hit the update button yet. But when we do, here we go. See, it pulls them up. Pulls up not just the names, it pulls up their core data, gross margins, operating margins, and so on. I'm just going to hit the cancel button because we don't just see it all. And, just across these three, MU, AMD, Intel, for example, very similar gross margins, right? ROEs for all of them. MU is actually the best out of the lot. Price over free cash flow, that's from a price point of view. Intel is a little bit cheaper, but that doesn't matter that much. All three of them have very little debt, which is quite impressive given the capex. Earnings per share growth the last 5 years, look at that. Micron, 84%, truly staggering growth. That's why people like this stock. So you can see why quite clearly. Institutions love it, 83%. So you can get that kind of quick snapshot overview benchmark very, very easily. You can get your hands on that at felixfriends.org/Patreon, links down below. Join us for like 20 cents a day. Join us for the year. You get an extra month off as well. That's a useful thing to do. And then secondly, well, very simple. I sell options mostly. I actually bought some options on the weekend, and that's something to understand about volatility. And for me, options this year have delivered over 100% return. And I can't say the same for this is my options portfolio. My stock portfolio is down about 11%, something like that. And that's fine. That's completely okay. It's a much, much longer term horizon for options. I want to make money by Friday. With stocks, I want to make money by the time I'm 50. That kind of a number. So that's what I'd recommend. And really, if you're going to do one thing where you're going to get the greatest ROI out of anything is make yourself a better investor. It's as simple as that. That's the one thing that's going to get you way, way higher returns than anything you can buy. Certainly anything more than fluffy coins and that sort of stuff. So come and join us. Just simply book a call. Have a chat with Cheryl. She'll walk you through how I help you through either coaching or our core courses and programs to just boost those returns, because that's important. You do that. It's so important you do that. People put it off. People think, I'll do it later. They never do it, and then they're 65 and they haven't got enough money in their retirement, and it's tragic because literally your salary should be 10% of the amount of your wealth. 90% of your wealth should have come from investing. So think about that. Have a chat with Cheryl. Thanks for watching. Thanks for tuning in. If you enjoyed these little macro updates and you're still with me after this long rant, I'd love it if you let me know whether you enjoy this or whether you want me to be more curt, more short, more snappy, or stop covering the macro thing altogether.